Hi, this is Kathy, and I wanted to go over Googl. This is the weekly chart. So this is a swing setup type time frame. Okay. Now, as you can see, Googl is in a big channel, and right now, price is in between opposing emerging patterns. The line in the sand level is 614.09. Now, there are a couple of patterns that have downside bias for their completion. The upside or the opposing pattern is ABCDs, and those are noted here. So again, the line in the sand is 614.09, but it's very important to see how price behaves at this 588.73 area, right? Right now, on the weekly perspective, price is in contraction mode. In other words, it's consolidating and it's trying to decide which side of the channel it wants to touch next, right? There's a little bit of bearish bias. It's pretty neutral though at this juncture. What we want to see is either price to take out 588.73, but then more important, take out 614.09, or initial support test to break down is this 540.67, and if that's the case, the bottom of the channel is the magnet target, and it correlates with the previous swing low or a B point. Okay, we could also utilize this B point here, which is shy of the 500 mark. So once price can break below the significant level 490.91, the probability increases tremendously to test a very high convergent support region at 444.71. This has a probable bounce reaction with the test there. How much it bounces is going to be key. If it bounces just to test the channel breakdown point, but then falls back through that bounce point, that is very bearish, right? If we get a bounce and it can push it back inside that channel and back above 490.91, then it increases the probability of retesting the top of the channel, because those two patterns, harmonic patterns that happen to merge at that juncture, are going into retracement mode. Okie doke. Now, let's look at more of a day perspective. Well, look at the day chart for a smaller perspective. And I left the lines, and I know it looks like, oh my God, too much information. But first, I wanted to show that the channel is still here, and then my other levels, the line in the sand, the significant level, all of that good stuff is still on the chart. Now let's just hone in to where we are, because we remember we're in contraction mode. So what we're looking for is either price to be able to push above this 568.35 level with conviction. At this point, the moving averages, whatever it is you use to determine conviction, at this juncture, the moving averages are flat. So there's no commitment either way at this where price is right now. Okay. Also, momentum indicators. This momentum indicator right here is also neutral, right? The volume is trying to find some upside bias, but it really needs to take out this point, 568.35, with high volume, okay? And then the bottom momentum indicator is showing a slight upside edge, but we want it's kind of curving to the right. So that means, uh-oh, you know, it's an uh-oh sign for upside. Now, also we can look at the candle, and today's candle so far is saying we're trying. Oops, no, we're coming back. So needs some kind of conviction to push through 568.35. You're going to want to see whatever momentum indicator you use pushing up to the upside, volume increasing above an average amount of volume, okay? Otherwise, a rejection here or failure to continue higher, then I would look for, and this is a reversal type candle, if we were to close like this, I would look for a gap attempt, okay, a gap fill attempt after today's close. If it closes with this kind of a candle, a bar candle, okay, a candlestick, oh my gosh, okay. Other than that, continue to get back inside of this bar. Once it gets below this region here, or this red dot, then I would look, let's look where that is. So back below 557.61, that would be a gap fill, and I would look for it to come back and test this channel line, trend line, and potential breach to test 540.67. Now, if price gets to that 540.67, it's going to need the same conviction to break below it as it does to break above this other conviction area. Okay? Alrighty, now I have gone to an intraday time frame, which in this instance I'm using an hour chart. Now there's a couple of things that really stick out for me here. So I'm going to draw these. So first one is I'm looking for, as long as price pulls back and holds above this 558.79, it increases the probability of going to 578.72. But remember, we have this really important need conviction to push above level of 568.35. Okay? Otherwise, if price is able to get below 558.79, this point here, it implies we're going into an attempt to fill the ABCD, which is way down here at 506.32, but we do have areas of interest along the way that price is going to have some kind of conviction to push through, namely 552.27, 540.67, and 532.23. Once price can break below that 532.23, it really increases the probability of going to the ABCD targets. Alrighty? And I hope that gives you some kind of clarification and to see how harmonic patterns can work for you.